I'm losing hope. But I'm broke, but now I'm living at it. They just count my zeros and some decimals. And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico. I invested dough and I let it grow. Regiments I got a pocket full. Rich the income and your taxes low. Spend it right and then invest some more. And if you don't believe me, ask my doctor, no. What you mean? You mean Uncle G? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the jet. I buy apartments, I send.
Hey guys, welcome.
We're undercover, help y'all discover who did it best. Just bought two troubles, can't wait till they see the face and they see what I do next. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow.
Welcome everybody. I'm gonna give it about a minute again to let everybody else in. How's everybody's day going? You can drop it in the chat.
Yeah, and only then do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heals on ills, deals. Look who went from meals to bills. It's eat what you kill when you're in the field. In the pipeline overflowing, I don't drip, I spill. We don't seek balance, nah, we want extraordinary. If you really knew my dreams, it'd be more than scary. We got more to spare, ain't no shortage, baby. Winning by the chopper and another for my lady. Talking about the bird and the strap, say the word and she handle that. Fully loaded, put it at the target, and you know we letting off every man. Got money, who got my back? You can never get it if you never ask. Big bags, legendary swag. Only one thing better than cash. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through, no I won't do. No, I won't do. No, I'm talking to. Not to. You know about to do. What? Walk in that door.
Hey guys, I like your hat.
Shopify helps you sell at every stage of your business.
Me
Like
turn
that,
my,
let's put it online and see what happens stage.
And the site is live.
That
Second.
we opened a store
Jerry,
and
you
need a
wanna go ahead
fast
and share
checkout
your
stage.
screen?
Yeah.
Thanks. You're all set. That chop.
I will figure out one day how to play music and not have to go to YouTube every time. Oh, you signed out.
It's making me sign back in.
All right. Well, I will go ahead and start. Hello, everyone. Happy Wednesday. Welcome to our Wednesday night multifamily Freedom Chasers Financing Zoom. My name is Shelly Miles, and I am a commercial mortgage broker and the co-founder of our brokerage company called Adventure Commercial Capital, together with Mr. Jerry Miles over there, who you guys already know. What our company does is connect real estate investors like yourself to lenders. So with that, Jerry, you want to go ahead and take over? Did you get your screen back up?
Yep. Can you see it?
Yes, I can. How has everybody's day been going? If you can hear me, let me know how your day has been going. We had a little technical difficulties 10 minutes before we started our Zoom call, and you couldn't hear my music, or I wasn't able to share sound. So hopefully you heard my music, and hopefully your day is going well. So let me know how your day is going, and also let me know if this is your first time on our Zoom call, on any MFC Zoom call. Let me know. Put a 1 in the chat. Okay, Yordi. My son's name is Jordan, and we call him Jordy. And I am sorry if I butcher anybody's name here. Sing. I'm gonna call you Sing.
That's perfect. No worries.
Okay.
Thanks, Shelly.
And okay, so you're probably Indian. I'm Indian as well. So your last name sounds familiar. So
Yeah.
how do you say your first name?
It's Charanjeev.
Sharanjeev. Okay.
You got it. That's
Sounds
not.
good.
Yeah.
Okay. First time Paul, first time Patricia, welcome guys. We will have a section where you guys, if you would like, if you're comfortable enough with us to introduce yourself. Jerry, go ahead.
All right. Welcome, everybody. I'm Jerry Miles. We'll go through today's agenda. We'll go through a few slides here, and then we'll do some introductions. Today's agenda, we'll go through the community ecosystem. We'll do introductions. I'll introduce us. We'll give a couple of you a chance to introduce yourselves. We can't let everybody, but probably 3 or 4 people to take 30 seconds each we can do. We'll go through the current debt market update, and then our main topic is navigating economic downturns in commercial real estate. And at the end, we will go to a Q&A. So the MFC community, a community like no other. We have now been doing these calls for about 1.5 years. Every other Wednesday, we do our debt call. We've done all different types of topics and had the guests on and all kinds of different things now. We enjoy doing them, and it's a way for us to meet with more people and connect with more people, and also to provide some value through the education. So on Monday nights, we have alternating Mondays with Trevor does the activation Zoom, we call it, and we'll usually have a celebrity guest or some, a rock star in the real estate space that has done really well will come on and tell their story. On the off Mondays from them, we have Iffy and BB, and they're slowly becoming rock stars themselves with they've bought several multifamily deals here in the past year. All of them over 100 units each, and doing well, kicking butt. On Wednesdays, you have us alternating with Ed and Kevin, and they are both commercial real estate brokers, and they talk about how to source deals, how to build relationships with brokers, and those types of things. So great value in these calls. A lot of good people on these calls as far as just in attendance. Make sure that you're putting your information and things in the chat. You never know who's going to be on here. I know that we've had people here locally that have joined that know us personally and have ended up doing business together here locally because they met on the call. So there's guys on here that can KP deals that can help you with signing on the debt and things. So there's a lot of people on here that you'd want to know. So.
Yeah, and also if you're not part of the Multi-Freedom Chasers Facebook group yet, I just shared the link in the chat. You can go ahead and click that, and you'll have access to all the Zoom calls that he just mentioned. And I think the Monday night with Trevor, last Monday that he had a great guest on, right? What was his name?
Who did he have?
He had the one big guy.
Michael Blank.
Yeah.
Yeah, Michael Blank. That's who he had.
Yeah. That's somebody who you want to connect with. But every one of these people on these Zoom calls, you want to connect and get to know better. So I encourage you to jump on all these Zoom calls. You're always learning something from them.
Yep. So who are the Miles? That's me and my wife there, and 2 of our boys in the back. We are commercial mortgage brokers, co-founders of Adventure Commercial Capital. We lend on commercial real estate nationwide and even some overseas. We founded Adventure Commercial Capital about 4.5 years ago. We've been in the construction business for over 20 years. Started about 10 years ago investing in real estate ourselves. Ran into some real shysters that weren't treating us fairly and things when it came to the lending space. And we didn't like the way we were being treated by several different lending brokers, and decided that we could do what they do better than they do it, and treat people fairly and be a service to the community, not just there to collect fees and to try to get rich, but to service a community. You know, Zig Ziglar is credited as saying you help enough people get what they want, eventually you'll get what you want. So it's our goal to service and be of service to as many real estate investors as we can. So and that's why we're doing what we do here. So who are you? You can raise your virtual hand or just unmute yourself and talk. Tell us who you are. We can give you about a minute a piece. Tell us a little bit about what you do for work, about your real estate journey. So, anybody want to go? Go ahead, JJ. This is our son, JJ. We brag on him every week because he's always the first one to raise his hand. But
Yep.
he's a senior in high school this year, and
Yeah. Yeah, my name is JJ Miles. I am the son of Jerry and Shelly Miles. I'm a senior in high school, about to graduate, which is really cool. And I'm going into the content creation space, mostly pretty much YouTube. I'm a YouTuber. So I make YouTube videos and that's how I make my living. Yeah, and it's pretty fun. That's pretty much me. Just turned 18. And yeah.
awesome, JJ. And JJ won't tell us about himself, but he hasn't wanted to be in high school a day in his high school career. He's wanted to be out and working. But we just found out recently that he was going to be valedictorian of his class. So
Yep. I'm gonna be valedictorian. Pretty cool.
so there's nobody else that wants to
Yep,
see.
there is.
Okay.
Paul.
Paul. Go ahead, Paul. How's it going, man?
Doing well. I guess nobody else will go. I guess I'll go.
All right, ahead.
So I'm Paul Props. My primary business is operated out of Casper, Wyoming, and we shred and recycle wind turbine blades. I take the cash flow out of that business and I put into real estate. And my whole thing, I'm trying to gobble up as much as I can right now, get it bought now and get out in about 10 years and take all my money and go live out in the middle of nowhere.
I
Not a
get
bad
a plan like that. I like that.
Nice to have you, Paul.
Yeah, good to have you here, man.
Thank you.
Sharon Jeef.
Hey Jerry, hey Shelly, hey everyone.
Hey.
Yeah. So I'm from Toronto, Canada. So I'm currently investing in Niagara, the Canadian side. I'm like doing some of the conversion projects on real estate side. And then I'm working in Columbus, Ohio on like smaller flips. But I am looking to move in the bigger multifamily space, in specific in Ohio, like Cleveland, Cincinnati, those areas. As I am on a full-time side, I'm a project manager in the information technology company, and I'm just doing passively for now. Yeah, that's pretty.
Very, very cool. Yeah, we're located in the Cincinnati area as well. So,
Cool.
I know you're in Toronto, but you mentioned Cincinnati there. So that's our area here where we're at. So,
Yep.
Cool. Yeah.
well, cool.
Good to have you, Sharon Jeeve.
Have you here.
Yes, you missed that.
Yeah. All right. So,
And yeah, I just want to say one thing. What Paul and Sharon Jeeve just did was what you guys need to be doing by getting out there and making yourself known so people will know you and want to connect with you. The more you're out there, the more people know you, the more people are comfortable with you to connect with you and do business with you. So good job, guys. And
yes.
JJ, you did a good job as well.
Yeah. All right, cool. So, getting into the current debt market update, where current rates, the Fed rate, we're still at that 5.25 to 5.5 range. All these promises of rates being lowered and things like that just haven't come. and they just kind of keep kicking the can down the road. Every day there's a different news cycle of, oh, well, this is looking better. Maybe they'll lower this next meeting. And then the next day we have, oh, well, this is looking real bad. Inflation is running rampant, and then they're talking about, oh, well, we're going to wait till fall to lower rates again. So it's just every day it's a different story and different headline. The 10-year treasury, 5-year treasury, 7-year, the treasuries are what you want to look at as far as seeing what your rates are going to be like on multifamily. When we see the 10, the 5-year, if we're looking for 5-year debt, the 5-year treasury being 4.33, that means your rates on long-term debt is going to be anywhere from 1.5 to 3 points higher than the 5-year generally. Or if you're looking for 10-year debt, it's going to be anywhere from 1.5 to 3.5 or whatever on, the treasury. So you can talk to lenders. When you talk to a lender, say, hey, on this type of product, what are we going to be on a 10-year? How many points above the 10-year are we going to be? Or, you can ask those types of questions. If you're looking at, anytime you're talking about that, you can ask the lender, hey, what do you base your rates on? If you're getting an SBA loan, it's going to be based on the Bank of America prime. They're going to say, oh, we're the BOA prime +5 or prime +3 or whatever it is they're basing their rates on a certain deal. So that's how the rates are determined. This here is an updated rate sheet. Today is the 2nd, right?
No, the 3rd.
3rd, okay. Yeah, today this was updated on the 2nd. So this is Freddie Mac's small balance loans. Freddie Mac's small balance goes anywhere from 1 million to 7.5 million. You can see the 5-year at an 80% loan to value, what the rates would be a 7-year. The DSCR that they're going to look for, 1.4, you're going to get a little better rates than if it's a 1.2. I'm going to turn my phone down here. But this is an updated rate sheet. Things that will determine the rates will be location, the sponsor's strength. So how good is the sponsor that is signing on the debt? Have they done deals before? Those types of things. If you have a property that has below market rents, where you can call them affordable rents, a certain percentage of those in every market, it's different in every market. You're going to get a little better rates if you have affordable rents. If you're out away from things and it's kind of a secondary market, rates are going to be on the higher end. If you're have a high concentration of one employer, those types of things, whether it's a military town, whatever, those might be deal killers, but that they'll be on the higher end of the rates too if they're able to qualify. And then here is Fannie Mae. Fannie Mae's small balance program goes 1 to 6 million on loan amounts. All these you can have a interest only period. We can do rate buy downs. There's a lot of different things we can do. So give everybody a chance to take a picture or screenshot or whatever you want to do with that. Yep, I see your hand. Go ahead.
Hey Jay, just one quick thing on the previous slide. It says like 5-year hybrid. What that hybrid means?
The hybrid is usually going to give you a little bit more of a interest only period.
Okay, okay. Do you know like how much is generally have like is any like specific, like if you take like 5-year hybrid, just
Yeah,
like
you'll get like 3 years of interest only. You can probably take a 15 basis point hike, or 15, you know, 15 basis points hike and get a full 5-year interest only or a full 10-year interest only. So every deal's different and it's going to underwrite different when you put the numbers into the system for a specific location or whatever.
yeah, okay, cool.
That's kind of general terms.
Okay, okay, sure. Yeah. Thanks, Sherry. Thanks.
Yeah,
Thanks
no
for that.
problem. And so to keep going with the current debt market, we've had a stagnant market over the last year and a half, really. Since the rates have gone up, it's stopped a lot of the action that was happening. A lot of the buying and selling has stopped. A lot of bridge lending has kind of stopped. About half of our bridge lenders and short-term lenders that we've dealt with have stopped lending altogether. The ones that are still lending are being a lot more cautious. And I'll go ahead and read this to you guys. I reached out to an old contact this morning. I see your hand, Grant. Give me just a second, and I'll call on you here. So I reached out to a lender that we have dealt with in the past. I'm going to pull his email up to you, and I was sent him an email this morning just asking, hey, how's it going? What's business going like? Things like that. But I'll tell you what he sent me, just to kind of tell you what lenders are looking at. So he told me, he said, I definitely want to see any of your multifamily deals, even commercial deals. Though our credit box is tighter, we still hope to win business being cheaper than the competitors. With that being said, it's not the same. Give me just a second. Anyway, he was telling me that they're okay, about our bridge program. It allows for construction, some fix and flip type lending. However, it is very capital intensive for us and is sort of on the back burner of which we're actively looking to originate. And, it's capital intensive because they're lending all the money out and they're not selling these bridge loans off in the secondary market. Once they lend out on a bridge deal, that money's staying in that deal and they can't recycle it as fast. Like when they're lending on the longer term products, they're taking a few of those together and they're selling them off to another lender or to Wall Street, and they're buying them up and they're getting their money back to lend out again. A lot of these bridge lenders that were only doing short-term debt, have their money lent out and, they're not able to refinance out of this debt right now. They're not able to sell it or they're going to lose their equity, because valuations have fallen so much. And so they're just sitting here holding and paying these high, 10, 12, 13% interest rates. And then you're having to pay points every 6 months or a year to renew these loans, to keep the properties. And so a lot of these lenders, I've had a few of them tell me, oh, well, we're not putting any more money in the market when it comes to bridge debt. So just something to know that what the market's looking like, because they don't know that these borrowers are going to be able to get out of the bridge debt that they're in. So I see you, Grant. Go ahead and unmute yourself there, man.
Yeah, so I'm having a hard time right now finding anything at 7.25 or about 7.25 for loans right now. And I'm trying to get a couple deals done where again it's problematic getting the DSCR to make sense with what people are wanting for properties. People evaluating and saying, well, this is what it was worth 6 months ago. Well, yeah, 6 months ago it was worth that because you could afford to pay it. Now we can't get that. So the question is, do you know of, or do you have any access to 7.25 with 30% down, anything from 2 mil plus in terms of loans?
Yeah, I mean, the agencies where we just saw the rate sheets, it's just a matter of finding the right deal. you're in the same situation that everyone else that's looking at deals right now is in.
Yeah.
You know, the deals just aren't penciling out. You know, just know that if you're trying to buy that deal and you're not able to get it with, 30% down, nobody else is going to be able to either. There's not some special bank out there that, only this one person or two people have access to. It's, the debt is the same for everybody. All the debt brokers underwrite the same way, and all the buyers, if they know what they're doing, are underwriting the same way as well. So it's just a matter of continuing to pound the pavement, continuing to find, continuing to look, and then, when you're talking to brokers, ask them, hey, because a lot of these brokerage houses have their own, they have their own, lending brokers that are on staff. And if you're having trouble penciling it out, you're getting quotes of this and that, and then maybe you're getting 60, 55, 65%, loan to value, ask them, say, hey, if I buy this at 60% loan to value, my cash on cash is 3% or 4%. My investors can get 3 or 4% from the treasuries right now. Why would they invest in this deal where they, it's more risky, and I would talk to them that way and say, how are you coming to your numbers? And then just be honest with the sellers and say, hey, this is what I can buy. This is what I can pay. And you continue on that way. And the brokers that are selling the places, they understand, they know. And there's a lot of them trying to buy deals themselves, a lot of the brokers, and they're in that same situation, and they've got to kind of play dumb with you when they're dealing with you, because they're working for the sellers,
And that's understandable, but given that Cincinnati, you're from Cincinnati, it sounds like there's one that we're working on. It's a 29 unit. We're trying to pick up for 1.8 or 1.85. We're getting our DSCR to 1.22. Trying to fight for just those couple extra points, brother. This is the bigger issue is we're trying to make it work, and the sellers are telling us this is bad stinking crazy. We can't make the numbers work any better, and our cash is already tight. And I think that's what I think that might be 25% LTV. We could raise a little bit more capital. That's not a problem. It's just looking at this saying, how does this make sense? So as we go into another downturn, from the commercial end, the broker and agent side, how the hell do we get things to go and help people to be realistic in the sales part?
Yeah. Well,
and if you don't mind, what is expense ratio for you this deal?
I'm sorry, can you repeat that one more time?
What is expense ratio? Like when you calculate the DSR, what is expense ratio?
Looking at as far as your expense ratio, he's asking.
The expense rate, it depends on which property. I'm looking at 4 states right now. Almost every single one of them we're calculating, tabulating. So we're between 55 and 60% potentially.
Okay.
We're doing the best we can with what we got. Limited market it makes it all sorts of fun.
I mean, the reason I asked, my other friend went for a deal. It was pretty close, but last moment, he was on a 39% of cost expense ratio. So with 1.4 debt ratio, but lender didn't approve. They said, no, you cannot run this for under 50% of expense ratio.
Right.
So they denied the loan.
Yep. That'll happen. The lenders know the different markets. They know, what each property should be at as far as expense ratio and what they're going to underwrite it at. But I would tell you, try to understand why the seller is selling. Ask that question. Hey, why are they selling? What's going on? What's their business plan? And, try to understand are they in pain? Are they hurting? Did they have some debt come due, or do they have debt coming due? Are they struggling, managing the thing, what's going on with them? Or are they just out testing the market and wanting to reinvest that money into another deal? Because if that's the case, they're probably going to hold their price a lot better. If their debt has come due and they're in a bigger interest, or higher interest rate than they started with, maybe they're not cash flowing anymore, that kind of thing, they're going to be more likely to negotiate with you. So I just, finding out why they're selling is a big part of it. So, and if they're not real sellers, and they're not willing to negotiate, then you got to move on to the next deal.
Yeah, they are in the dream world of 2022, June, July timeframe.
Yep. Yeah.
Yeah,
So-
but wait till we get to the 2010. If you
Yeah.
remember what 2010 looked like, 2009, awful. There was no lending. You couldn't go out and get anything.
Yep.
Yeah.
So, it's all relative.
Yeah, it is. Yep. So, a lot of you guys that are shopping for deals, that there's a big correction underway. We're just at the beginning stages of it, I believe. And there's a lot more opportunity coming. $2.7 trillion of debt maturing by 2027. Half a trillion in 2024, half a trillion in 2025. If you're out shopping, you're going to notice more lenders are listing properties as well. So we're working on a project for somebody right now that the lender is selling the property at 27 million and the property's appraising for 110 million. So it's a big resort property, and it's going to be worth over 200 million when they get in there and do some work to it. So the deals are coming, and I mean some good deals. These guys foreclosed on the other developer, and these people are coming and taking the development over, and they've got an accepted contract at 27 million for a property with a active appraisal of 110 million. So the deals are out there. You just got to keep looking. So to get on with the main topic, navigating economic downturns in commercial real estate. Number one, and Grant just said it a second ago, 2010, we had lending kind of went away. There wasn't money out there to buy deals, and the people that got deals had cash. So cash is king. Cash is king in a downturn. So save more, earn more, start a new business. They keep talking, if you watch Bloomberg and CNBC, they keep talking about the gig market, all the people making money with, piecework, no matter what the work is that you do, whether it's, software work or construction or whatever, you can go out and make a lot of extra money that way. We have a referral program. If you, want to get paid from your friends and family that are investors, that hook them up with a lender like us, and we'll pay you referral fees if we close business with them. But cash is king. Grant Cardone, I'm in his real estate club. He's got, I think, almost $1 billion sitting there in cash because he's been raising money. He's on social media raising money. Everywhere he goes, he's raising money. And GrowthCon this week, he's doing GrowthCon this week. I know some of you guys are on GrowthCon, watching GrowthCon. He's raising money for deals at GrowthCon. He's out making money with GrowthCon with all of his sales tactics he's doing. Trying to sell all the programs. He's making more money so he can buy more real estate. So, expand your mind. Figure out what you can do. We'll be doing a call on our referral program here, and over the next month or so, we'll be doing another one and talking about how you can refer business to us and make money. We've got a couple deals in the works right now where we have referral partners that stand to get checks for us in the 6 digits. So we've got a few deals that hopefully will close here this month that one referral partner in particular could make a couple $100,000 on these 2 deals just for referring the business to us. So.
And I want to say something. I do apologize. We keep saying we're going to do a referral Zoom call, and we haven't. We've been busy. If my email is going to be at the end of the slides here, if you want to send me an email and let me know that you want to know more about the referral program, I can send you one of our links to our last Zoom call we did, and that has everything in it you'll need to know. So
Awesome. All right. So number 2, roll up your sleeves and don't be afraid to get dirty. A lot of owners and a lot of operators, interest rates right now are not the only things that are hurting deals. You know, we know of one guy that has several thousand units in Florida. And his insurance over the last 2 years has gone from $700 a door to over $2,000 a door per year on insurance costs. So you pair that with, rents aren't going up as fast as they were. And some areas are going up, some areas are staying stagnant. Some areas there might be going down a little bit now, but you pair that with, the raising insurance, with taxes going up, with interest rates and just the whole 9 yards. When you call a plumber out or you call a roofer out or anything, they're more expensive now than they were 2 years ago as well. All these things are making it rougher to run deals in this kind of a market. Bringing more things in-house, maybe if you have a 50 or 100, 200 units or something like that, maybe you, instead of outsourcing more of the repair work, that you hire a maintenance guy, and maybe you didn't have one before, maybe you only had one and you need 2 now, or whatever, to keep from having to pay the bigger bills with and you can fix your costs that way. Some of the hard stuff that people source out, some of the asset management type stuff that maybe you can do, but you've outsourced it just because I got into this business to be free and not have to do all this work. But now that the money's getting tighter, maybe you got to take some of this work back on. And maybe it's not just in your business or in your in your apartment business. Maybe it's just saving that extra $100 a week or whatever it is to have somebody cut your grass, or whatever it is that you're spending on that maybe you could cut back on, and do some of that stuff yourself. So number 1, cash is king. Number 2, roll your sleeves up. Don't be afraid to get dirty. Number 3, keep your integrity intact. When we have a downturn like this and people start, money gets tighter, if you're running a deal with a group, maybe cash flow isn't there anymore, and your bank account isn't looking as good. The worst things come out of people when things get bad. You learn truly how people are when things get bad. So if you have partners that, maybe you're struggling financially, maybe they're not going to have the integrity they once did, and I just want to encourage everybody, as things get tighter, people that keep their integrity and show good faith, you'll reap what you sow. It's been probably 15 years ago or so. Cincinnati had some real bad crime and things like that going on, and the city was trying to keep businesses in downtown Cincinnati here. And they gave out a bunch of loans, really just, they wrote a bunch of loans out to people that had businesses downtown, trying to keep them there in their spaces, because it got so bad to where people just weren't coming down and shopping. They weren't coming down and spending money, and these businesses were hurting. And the city wrote all these loans out with no, just kind of like credit cards. They didn't have anything backing the money up other than, this person's word that they're going to pay. Sign on the line and we'll give you a check for 30 grand or 100 grand or whatever. And I'm listening to talk radio, And there was a guy I went to school with whose dad had an antique shop downtown Cincinnati, and they were talking about him. And I'm like, oh, so I turned it up, and I'm like, what are they talking about this guy for? Well, come to find out of the 50 or 60 businesses or whatever it was that took loans from the city, he was the only guy in the whole city that paid back his loan. And they were talking about this guy on there, and he was still in business. He's still in business today downtown. His antique store is, and just hearing this story about him, that he had the integrity when everybody else in the city wasn't doing what they were supposed to do. He kept his word and he paid his bill, and he's been blessed for it and still in business. And they're a blessed family anyway. But just keeping your integrity, and it'll follow you, and it'll especially in this business where you're trying to raise money, things like that, making sure that you put your investors first and you put other people and things first. Is very important to to growing your reputation and your business there. So you'll reap what you sow, in other words. So number one, we had cash is king. 2, roll your sleeves up. Don't be afraid to get dirty. Number 3, keep your integrity. Number 4, know who you're going into business with. A lot of people, I'm in Grant Cardin's Real Estate Club, and I've seen multiple people now. I've been in there for 2 years, and I've seen a lot of people get in there, and they meet each other at these events and things that we do. And these guys know each other from a weekend and a month's worth of phone calls with each other, and they go into business together. They go into the biggest business they've ever bought. They'll buy a $10 million property or $20 million property together, just to find out that they have totally different visions of how life should work, and how things should run, and it doesn't it doesn't work out good a lot of the time. But sometimes it does, sometimes it doesn't. But when it doesn't go good, it goes really not good. So when you're looking at future and your partners, make sure that you're getting somebody that has some experience. My wife's always saying this, because we hear Grant talk about it all the time. Don't be the smartest one in the room. So don't go into a deal with somebody because you think that maybe you got a leg up on them. You need to find people that can bring you up instead of the other way. And then something else to figure out when you're looking for partners and things, especially when we're talking about going into this downturn. It's always good when things are going up. If you guys can buy a $10 million property and turn around and sell it in 5 years for 13, 14, 15 million, those things are always good. But when you buy a $10 million property and you don't have any rent growth for 3 years, your insurance goes up, your taxes go up, all these things are going up, and it's getting tougher and tougher to hold the property, that's when you need to make sure that your values are the same as the people that you're doing business with. So number 1, cash is king. 2, roll up your sleeves, don't be afraid to get dirty. 3, keep your integrity. Number 4, know who you're going into business with. And then number 5, watch out for other people's problems. So when you're shopping for properties, I was talking to Grant and Mr. Singh earlier. Look at why they're selling. If you had a good property that was cash flowing, your debt wasn't due, you had a good, good everything going on with the property, and it's cash flowing, why would you sell today? We have property that's cash flowing, we got equity in it, we got all these things. We're not selling. It's not part of our plan to sell the property. Why would anyone sell a property that's doing well when 2 years ago it was 20, 30, 40% more valuable than it is today? And it could be more valuable by 20 or 30%, 2 years from now or a year from now. It just makes no sense. So if someone is selling and they're a real seller, be careful and try to understand why they're selling. What are the problems that they're trying to get out of? You know, properties that are really easy to buy and get into, be leery of those. Um, you know, we're talking to someone today. They're trying to buy an $11 million property, and they're down to the final two people, and they're trying to, you know, trying to get their number in, trying to get their number in, trying to get all the numbers just right because and they're even thinking, man, this is a nice property, brand new build, you know, really nice condo style units with their own garages and just beautiful property. And and you know, there's a lot of people trying to buy this same property and fighting over it because it's a good asset. Um, Properties that are really easy to get into are going to be really hard to get out of, if that makes sense. If you have trouble and you're battling trying to get this property and you're battling against 5 or 10 other people, you know, trying to get this property, when it comes time to sell, that's going to be a property that's easy to sell. So those are things to consider. And also, what do the lenders think about the property? You know, we're dealing with that right now. We've got several deals that we're trying to find, you know, lenders to refinance the property for people. And there's just, you know, I've got one in particular that these people are struggling with, and we're trying to refi. It's worth 16 million. We have an appraisal for 16 million, and they're just trying to refi for 8 million to get out of a bridge loan. And I've been through probably 20, 25 different lenders, and every one of them, no, don't like the asset. Nope, don't like the asset. You know, and the thing appraised for 16 million. He wants to refi 50% loan to value, and nobody wants to do it. So make sure that it's a property that lenders will lend on. You know, we have other deals right now where we have lenders just lining up wanting to lend on these properties because it's a good asset. So when you're looking, don't, you know, if you're looking at a property, a lot of people are trying to do seller financing and these types of things. Before you enter into a seller financing deal, find out if the property is financeable. Because if you plan on exiting at any time, you're going to either need to seller finance yourself to get out of it, or find someone with cash that wants to buy it. And so you need to know that these properties that you're buying are financeable through the bank. So, and I saw, Grant, that you had your hand up a minute ago. What'd you have, man?
No, the biggest thing for us is trying to find the mom and pops. The kids and the grandkids don't know what the heck they're doing. They'd rather have the money now. And so the best deals that we're finding are the ones that are the mom and pop saying, hey, I'm too old for this stuff. I'm done. I just want to cash out. They don't want to 31 it. They don't want to move it to anything else. They just want to be done with it. Not understanding, you know, the kids and the grandkids have no clue. So that's what we're looking at. I'm sure you're probably seeing the same thing. They don't know what the hell they're doing. Pardon my French.
No, yeah, you're right. You're right. And then, you know, that's in the real estate space. That's in the small business space. A lot of restaurants and, you know, smaller construction businesses and service companies and all that. You know, a lot of people just, you know, they don't have people that they trust to leave it to, and they're trying to sell and cash out. So that is the case in a lot of situations. So I will go to, right now we are open for question and answer, but I'm going to roll through the rest of the slides as people come up with questions. But I see your hand, babe. Go ahead.
I got a couple of questions here in the chat that I'm going to read, but if you guys want to raise your hand, I'll let you speak. One is, oh, where did it go? Are there any banks offering 80% LTV?
Yes. Yeah, there are
Okay.
banks offering 80% loan to value. It has to debt service. Fannie Mae will do 80%. I haven't seen it because things aren't debt servicing at 80%. But yes, we can do 80% loan to value.
Okay, that was Jeff's question. I think he's still on here. Okay, and then I have, do you work with C4 by any chance? Lenders that will lend on C4. I wasn't 100% sure on that one.
Specify what you mean by C4.
That
Grant.
was actually for me, C4 Financial in Cincinnati.
Okay.
I didn't know if you'd ever worked with them before, and I know sometimes things are brokered or broken off.
Yeah, I don't know them.
Okay.
Okay.
No, we don't work with a whole lot of Cincinnati stuff. Our last few deals we've closed have been Texas and Florida. And the lenders that we work with, most of them are based in New York, New Jersey, and there's one in Boston, and a few out on the West Coast, California, Los Angeles, San Francisco. That's where a lot of our lenders are based. So.
Okay.
Needed.
Sorry, go ahead.
No, you go ahead. If you have another question or.
Okay. What is your recommended interest rate we should underwrite at currently, and what LTV? And at what LTV?
Well, if you're looking, I mean, that's if you're looking at stabilized multifamily assets, right now, those rate sheets that we put on the screen at the beginning, those are going to kind of give you a good basis line. Anywhere from, if you're looking at bigger deals, 10 million plus, we can be down in the fives. If we're looking at smaller deals, sub $1 million, you're going to be up higher. You might be 8-9% on some of those. It's a matter of what type of deal that you're looking at. So I see your hand there. Paul, go ahead.
So I've got a question, and I don't know if this is one you can necessarily answer, but one of my partners, we're buying stuff in the Joplin, Missouri area. Anyways, he's local to that area, and he owns a property management company. That's how him and I became connected. Did a lot of fix and flips and all that stuff. Anyways, I'm like, let's go after apartments. We need the scale, right?
Yeah.
Well, he wants to look at all the local. He wants to do the financing through the local banks. Well, the local banks, they don't understand commercial property, and the terms are terrible. And I'm like, let's look at other financing, and he doesn't want to. And I don't know. It's like, how do I have that conversation? Because it's really, I don't know. I want to say, look, it's better. We can talk to a lender that knows what they're doing. We can ask these questions. We can be flexible on term. I mean, you guys know how it is. It just,
Yeah, I mean, just talk to him and say, hey, let's shop it around a little bit, and get a few different quotes, a few different ideas. You
can bring on one of our calls too, and also our brokers. So we also work with banks, and we can get you like any type. When you go to a bank, they just have a box they fit you in, and we can get you from a bank. We can get you from a hard money lender. We can, so you can have him jump on one of our calls and ask questions if he wants to.
I like that
open
idea.
his
I
mind.
didn't even think about that. Thank you.
Yeah. So you have that, and then the local banks, a lot of times, in the past, if you have a good relationship with somebody that knows what they're doing in a local bank, has been a while there where they were, you could get some of your best debt from the bank.
Yeah.
But now the banks are hurting a little more. Things are a little tighter for them. Some of the best debt you're going to get from multifamily is through the agencies. Some cases, CMBS. We have some CMBS options that, those have come down a little bit. You know, it's just a matter of what the asset's looking like, and you know, there's a lot of variables there. So, Jeff, go ahead, man.
Hey, good evening, everyone. Just wanted to check and see, you said something about the bridge loans not being able to, you know, get their money back and sell it on the open market. How long before these bridge loans will actually come back to help us with some of these tired properties that nobody can buy and nobody has their own cash to fix them?
Well, I was talking to a guy. He's part of our lender group that we work with. He was running a fund that was doing bridge debt. And he had a $500 million that he, you know, would cycle through per year.
Mhm.
And I was talking with him. He shut their shop down about 6 months ago. They shut down. They're just collecting, you know, money on the outstanding debt and servicing that. They're not lending any new debt out right now. He told me that he was thinking he would be opening shop back up in 2026.
Wow. Okay. I guess it'll be a couple of years. If it's a couple of years, it's just going to be what it is. You know,
Yeah.
if nobody's doing it, then these properties will just get a little more tired, a little more, you know, help needed when they do get the money flowing again.
Yeah. Yep, for sure. And, you know, we all saw it in 2008, you know, over the next 3 years after that, you know, there was whole neighborhoods that, you know, you would have every other house would have grass grown up, and, you know, the siding falling off and those types of things. And we'll start seeing more of that in the commercial space as well. You know, I mean, we see it around us here with some of the malls. Our mall here where we're at locally in Florence, Kentucky, there's 40 empty stores in that mall right now.
Wow.
And it's not a huge mall. It's you know, probably only got, you know, 60 to 70 stores in it altogether, and, you know, 40 of them are empty, is what we counted around Christmas time.
That's horrible. They can't make it with less than 50%. I think they got to be, you know, in the 60s to be able to operate profitably. So.
Yep. And so we'll see it. You know, we'll see it in some of the other spaces as well. You know, there's another mall here in Cincinnati that, you know, they've got, you know, every store there is empty, and they're you know, the only store there I think now is Kohl's, and, you know, every other one's empty. There's not one store in the whole place, and it was a big fancy thing when they built it, you know.
But we know Sears is out of the business now too. I mean, the only thing left of Sears is the Allstate insurance. So they still got the Craftsman tools out there, but somebody else bought them up so they could have that name. But, you know, when Sears, who thought they'd ever go out of business?
Yeah.
I mean, retail space is a little bit different because, you know, they have cost and insurance, employment, you know, benefits. Those are like too expensive at this point. That may be the reason. I mean, of course, sales also impacted, but their expense is extremely high. And, you know, I just want to share you one other thing. Like, you know, I was, you know, one of my cousin was looking for an apartment. They were listed for a month free. But, you know, we were able to negotiate $50 cheaper than they listed, first month and last month free if you sign up for a 12 months lease. So you can just see, like, you know, where we are landing, like, you know, so that's like a 2 months free for a 12 months lease, which brings the cost is a lot. So that's what the current market situation. Yeah.
Yeah, it is. Rents are going down in a lot of places. I see Andrea. How you doing? But yeah, look at that when you're looking at buying deals. Make sure that there isn't things, you know, you have a lot of leases that are coming up due where they don't have to pay their last month. That'll hurt you if you got, you know, 20 or 30 apartments that way on your rent roll, you know. So, Andrea, go ahead and unmute. How's it going?
It's going good. I miss you guys.
Yeah, it's been a while.
These are some great phone calls. I love working with you guys and just getting more knowledge, more nuggets, sharing the love. And multifamily is a fun space. It's definitely a team sport,
Yeah.
but there's always ups and downs, you know. I have a question more about a struggle we're going through as a team. So some of the debt, we have a lot of leads and we do have quite a bit of capital that we're working with right now. So the struggle right now is we're we've heard this from a few lenders and mortgage brokers that in the Columbus, Ohio area or Cincinnati area that we're investing in, that we need a local partner in order to get more debt quotes. So what does that mean to a lender in terms of a local partner? Does that mean that it's somebody that has to be in that city, or is somebody that has to be within a day's worth of driving distance to be able to look at the property, go through it? Because it's taken us about a year and a half to get all these leads, all these business capital partners. So us bringing on another person we don't know as a local partner is going to take some time for us. So how do you like what do they consider a local partner?
Yeah, I think Freddie and Fannie's 100 miles
Okay.
from the property. I think is where they're at with it. And Freddie and Fannie's like is what they always, the rep I deal with Freddie and Fannie, he's always telling me that they're fluid, so if you have somebody that's 110 miles, it's going to be okay generally. Unless other things are tight on the deal, then they're going to say, oh, this guy's too far away, or whatever. But I think it's 100 miles with Freddie and Fannie is what they see.
And they need to sign on the debt, or do they need to have a W-2? What's the requirement for that local partner?
Yeah, they need to be part of the GP team that is there signing and stuff. Yeah.
Gotcha. Okay.
And
well, thank you.
And I don't think that'll be something that will continue to follow you. I think it'll be something that is they'll want it on the first deal or two in that market, and after you have a track record a little bit in that market, they're going to lay off of that a little bit.
Yeah, I mean, mind you, I think I have like 1,300 units under my REO schedule just as an individual, but and it's my first time investing in Ohio, so that's why I was thinking, does it work like this in any other area? But in the other areas where I have investments, we have property management in place, and so they're usually our local partner. So we've made vertically integrated the property management team to do that. It was good to know. I appreciate your time on Zoom.
Yeah, for sure. And we're here local in the area. If you want to connect again on things, if you want to connect with other people or whatever, just let us know.
Yeah, that'd be great. Thank you so much.
All right. So kind of going through the last of our slides here, things we need for a quote. Yeah.
Hey, we're cutting it close on time, but I do have one more question and then you can move on.
Yeah.
Okay, so Jaden said, what types of properties do the lenders seem to prefer when you were talking about that? And before you answer that, I just want to tell you guys to throw your information in the chat and connect with each other. Throw your Instagram handle on there as well, so you guys can connect and follow each other and do all the good stuff. Go ahead.
Yeah. Nice locations, high population centers, tier 1 markets. If you're looking at what do they like the best, number one, tier 2 markets, properties that have, good historic cash flow, places that people want to live, places that, you're going to have a waiting list for tenants. Those types of places are the ones that lenders like. They love storage. Storage always has people in there if it's in a good location. They're leery of hospitality right now overall. We have some lenders that have just stopped on hospitality altogether. I was on the phone with one today. We're doing a refi on a hotel, and he was telling me how how bullish they are on hotels. He said, we think the hotel market's coming back. He said, we're not worried about it. You know, and they're lending a lot of money on hotels right now. You know, older properties that don't have an identity. You know, maybe they were built for a certain purpose. They're being used for something else, and maybe it's not a good fit. And lenders don't like that. You know, the one I was telling you about, you know, earlier that the lenders are not wanting to lend on, it was a warehouse. It was a big factory. They had a particular product they made back in the early 1900s. And now they've taken and cut it down, and different businesses rent different spots and use warehouse space and office space. And it's kind of an odd cut up place. Great location and things, but it doesn't have an identity. And, you know, I've had a lot of lenders, oh, is this an industrial? Is this office? And, you know, oh, well, we don't know what it is, so we can't lend on it. You know, so it needs an identity, it needs a cash flow, it needs some stability. So that's what the lenders are looking for. So needed for a quote, T12 and rent roll, OM is very helpful, not needed totally, but very helpful because OM and rent rolls don't have addresses usually on them. A summary of what you plan to do with the property is very helpful, or a little bit of your business plan, what your thinking is on it. SREO or PFS will be needed as we get further down the road. What can you do today in order to be able to be the KP tomorrow? Start getting your credit in order. Work on your own PFS and SREO. Get your bio together. Mercy, are you unmuted on purpose, or you can talk if you want to? Oh.
No, I need to mute myself. Sorry about that.
Okay, all right, no problem. All right. So get your bio together. You know, you're on this educational Zoom. If that's all you've done in real estate so far, put this education on there. You know, work on raising capital or making some more money. Our referral program is a good way to do that. This week's verse, Ecclesiastes 10:1. The heart of the wise inclines to the right, but the heart of the fool inclines to the left. So, and our next topic is, we're 10 minutes over. April 17th, we'll be here and we'll be talking about alternative financing solutions for commercial real estate. And then all of these places you can connect with the Freedom Chasers: YouTube, Spotify, Facebook, Instagram, and WhatsApp.
I just dropped the Facebook link in the chat again if you guys want to click on that. And also you can join our WhatsApp chat, which is on the next page. Scan this QR code right here and join the WhatsApp chat, and you have connection to everybody all day, 24 hours a day.
Yep. And about that WhatsApp chat, if you guys are on the WhatsApp chat, some of you might have noticed we had Michael Blank is on the WhatsApp chat now. He's part of the group and on the WhatsApp chat talking to people. So that's pretty cool. This is our contact info. That's my hi hello card. If you scan the QR code, and that is my cell phone number. If anyone wants to get me, I have that.
And I also dropped your Calendly in the chat if you guys want to grab that real quick. I don't always do that, so.
Yeah. Yep. And
Zoom call.
So I have my cell phone with me 90% of the time. I will not have it this weekend. We're going camping. So we scheduled camping, and then we had snow today here. So, so thankfully we're not doing tents. We have a camper, but still be a little uncomfortable if we go outside. So, but it was good to see everybody on here, and don't forget to connect with the other calls. There's a lot of value here on this page, and y'all have a great evening and a great rest of the week. See you next time.
Yeah, and I'm gonna share some music. So bye,
Thank you.
guys.
Bye.
Grab all those links in the chat.
When I walk through the door, I'm talking cash flow. And if you know, like I know, you getting cash flow. Broad, getting money, never losing no. But I'm broke, but now I'm living at it. They just count my zeros and some decimals. And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico, I invested though when I let it grow. Regiments I got a pocket for. Rich the income and your taxes low. Spend it right and then invest some more. And if you don't believe me, ask my doctor down. What you mean? You mean Uncle G? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like bitches. American Express. I bought the bank and I bought the jet. I buy apartments, I send checks. Yo, billionaire went undercover, help y'all discover who did it best. Just bought 2 choppers, can't wait till they see the face and they see what I do next. When I walk through the door, I'm talking cash flow. And if you know, like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know, like I know, you getting cash flow.
Yeah, and only then do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heals on ills, deals. Look who went from meals to bills. It's eat what you kill when you're in the field. In the pipeline overflowing, I don't drip, I spill. We don't seek balance, nah, we want extraordinary. If you really knew my dreams, it'd be more than scary. We got more to spare, ain't no shortage, baby. Winning by the chopper and another for my lady. Talking about the bird and the strap, say the word and she handle that. Fully loaded, put it at the target and you know we let it off every man. Got my money, who got my bag? You can never get it if you never ask. Big bags, legendary swag. Only one thing better than